Hello everybody and welcome to today's session from BankBI. Today's session will be covering loan funnel analytics as a leading indicator that you should be tracking. So thank you once again for joining. We're going to be going through a few housekeeping rules first, which will help you understand how we run the webinar itself and how you can interact with us through the polling questions and asking any questions, and also giving you access to previous sessions that you may not have been able to attend but might be interested in. So I think with that, I'm going to move into the initial session here. So again, to welcome you to the webinar, my name is Connor Blake, and I'll be hosting today's session alongside our BankBI CEO, Graham Goebel. We really appreciate you taking the time out of your day to join us today. For those of you who are joining a BankBI webinar for the first time, you can access recordings of the other webinars in our CFO series, and I'll be providing you with links after this event. So just before we start, I've got a few housekeeping items to cover off. With so many attendees on today's session, I'll have to keep you muted, but if you do have any questions, please do make a note of them or submit them using the control panel. We'll try to cover off these questions in the Q&A session at the end of the webinar, but we will respond anyway to all questions in writing, especially obviously those that we don't get to cover off at the end of the session during the Q&A. So during the webinar, if you can keep an eye out for the polling questions, I'll make it really easy and obvious when we're going to be doing that. I'll be asking you to respond to 3 multiple choice questions. Each question will appear on your screen and relates to topics that we're discussing today. So if you could be ready to just provide your response, it's really simple. It will come up on your screen. You make the choice by clicking on the screen, and then the poll results will come in, and I'll share those with everybody. Finally, we're going to be recording the session today, and you'll be receiving a link to that recording along with the supporting presentation and the written responses to any questions that we don't have time to answer today. So I think with that, I'd like to make a start by, again, talking a bit about the management responses that we're seeing to COVID in particular out there in the market. So based on feedback from our customers and what we see happening, I think we can broadly classify CFO and management frameworks into 3 main components. The first one being what I'd classify as emergency mode right now. So that's keeping those essential banking services open, making sure that staff can work remotely, and taking care of urgent customer support needs. That's including making sure that all the digital and mobile channels are able to cope with increased demand. So the focus here has been on cost and change freezes up until now. That's what we see. And while the businesses try to assess the impact of all the variables that are happening and all the current events, in some more extreme cases, that's meant that all approved projects have not yet started, or they're being indefinitely postponed, or all in progress projects being paused unless they materially impact clients. That's had an impact on many of the projects in the office of the CFO, although we do actually see this situation starting to evolve. Just to share a little bit about our case, we're a cloud native business, so we've been able to make that transition to a full virtual office pretty seamlessly. We've got all of our staff working hard on developing new features and delivering on client projects remotely, and there's no need for us to go on site or to travel. So I think emerging from that change freeze, we see that happening now and over the next few weeks. I'd say the next 12 weeks to September is going to bring the focus onto agile strategic planning. That means accelerating strategic planning initiatives, I think, with a clear focus on daily monitoring and those actionable insights, as most businesses are looking to roll out new credit policies and trying to monitor their impact. From an operational perspective, a lot of the immediate measures taken by businesses post-lockdown are now being tweaked, we see, to make them more sustainable for the medium term. So that includes operational delivery of services and support for customers as well as employees, and looking at selecting automation options for a number of aspects of the business. I think the final section is really about entering agile strategic planning mode. So we see the following 3 to 6 months from October being all about enabling business leaders to be more agile and increasing their ability to get ahead of events based on those actionable insights. So that could be, I think, a focus on new channel delivery, I think more of a permanent solution to support remote working, and that advanced scenario planning. So looking for tools and options to be able to get ahead of events as much as possible, some of which we'll be touching on in today's webinar. So I think with that, we'll get to the meat of the subject here. So Graham, I'm going to pass over to you now and give you control.
Thank you, Connor. Yes, hi everybody, Graham Goble here. So let's take a look at what we mean by the loan funnel leading indicators and how the analysis of loan applications can be an important indicator of our future performance. Firstly, what we're capturing here is a record of all loan applications submitted in the month, and also an update on the status of any already submitted loan applications as they change during the month. Now, these loan applications may, of course, be originating through different channels on different platforms to different degrees of digitization. And so one of the challenges that we have is how do we pull all of those disparate potential loan application sources together so to provide a single analytical data set. But let's talk about this process. So as loan applications move through their various states, we need to be able to measure them, monitor them on a monthly basis and also on a day-to-day basis. So understanding how many loan applications were submitted, approved, denied, cancelled, and for those approved, then subsequently funded, gives us a good insight into the business flow of the loan application process. Once the loan has been funded, we can then, and we need to monitor those loans as part of the total loan portfolio, monitoring their performance, detecting if they deteriorate and become non-performing. And Connor will talk a little bit about this, the other side of, if you like, the funded side of the business once we get into it later in the presentation. At this stage, what we're really talking about is monitoring and capturing the number, counting the number, assessing the value of the loan applications, working out the averages. And we're really looking to be able to then see that on a month to date, year to date, last 12 months. And this gives us the ability to see things like our conversion rates, how many loans that were submitted were subsequently approved and funded. It also allows us to dig into some of the reasons for denial. And of course, one of the things we're seeing a lot of change in the current economic climate is maybe changes to credit policies, and in particular, changing in demands and patterns of demand in terms of lending. One of the significant things we're seeing is obviously increases in certain types of lending in certain types of market. In the United States, things like the PPP, the Paycheck Protection Program, has created a large volume increase in terms of commercial lending. But on the other side of that, we're seeing a decrease in things like mortgages and mortgage applications. So getting a constant daily update of the loan funnel as indicators gives us the opportunity to use this information as a financial kind of weather barometer, if you like, giving us an insight into what we're going to be looking like as we go further on down through this process. Of course, as we react to the economic climate and put in place programs that and campaigns to let's say to support our local communities in terms of what is required, we're going to need to monitor that again in real time. So as we support clients, whether it be on the retail or the commercial side, whether it's extending lines of credit, overdrafts, credit cards, whether it's through payment protection programs, all of these things will lead to banks and financial institutions needing to react more swiftly, monitor the success or not of those various products, looking at the credit policy, as I say, looking at the conversion rates, and looking to detect signs of improvements in the business as time moves forward. So being able to analyze the data, looking at it through the lens of how long average time to decisions, understanding by underwriter, by product, by branch, where we've got collateralized lending, our loan to value percentages, by credit score. We need to look at credit score from a number of perspectives, both at the time of the loan application, but also in the subsequent performance reporting as time goes on. How has the credit score, credit rating of the client or customer changed over time? And so this ability to look at lending through the lens of a vintage, the month of it that the application was made, the month that the loan was dispersed, allows us to tie these things back to, for example, the credit policy at the time, and also feeds into understanding performance in a much more granular way as we unpick the loan portfolio going forward over time. So in summary, we believe that having good analytics around the loan funnel is an integral part of being able to measure, monitor, and manage the lending business. And being able to tie loans back by vintage to the loan application process is really key to understanding future quality and performance of that loan portfolio. So back to you there, Connor.
That's great. Thanks very much, Graham. So I think with that, what we'd like to do now is just move into our first polling question. So we just like to test our theory here. So the question that we're going to be putting up on your screen in a moment is, do you believe monitoring the loan application funnel is a good indicator of loan portfolio performance? So if it's A, then yes, we believe that there's going to be a need to analyze the loan application funnel. Or B, if no, you don't think that's the case, or it's not a priority for you. Or C, if you think that either you don't work in a financial institution or it's not relevant to you. So if you just bear with me now, I'm going to launch that poll and it will be appearing on your screen now. So if you could just take a moment, please, to let me just make sure we've launched that. Right, I've launched that now. So yes, you should be seeing that on your screen now. So if you could please just take a moment to understand the question and provide your answer, that would be great. I'll give us around 30 seconds for this just to collect the results and give you time to put your answers in before we move on to the next section. Okay, that's great. Well, in fact, you've all been very, very quick on that with your responses. So I really appreciate you taking the time to do that. So I'm going to now just give you one moment just in case there's any other changes of mind or anyone else wants to vote, and then I will be closing that poll and we'll move on. Just closing the poll now. Great, thank you very much for that. So now, just for some of you are going to be familiar with BankBI, but for those of you who are new to us, welcome for starters. And I'll just briefly introduce some aspects of what we do. So BankBI automate financial product and customer related performance management for banks, credit unions, and microfinance institutions. Our customers use our applications to measure, monitor, and manage their overall performance, as Graham was alluding to. And it's all the more important to be able to do that on a daily basis, especially when times are so changeable as we've been witnessing recently. So the goal for us is to enable our customers to deliver on their strategies to enhance operational efficiency, maximize cost reduction, and improve profitability. Now, our customers do this by using 3 key financial performance applications from BankBI. The first one with financial performance, we make your daily financials available to you anytime and anywhere and on any device. So that's everything from your GL. With banking performance, and that's the subject of today's webinar, we deliver comprehensive loan and deposit analysis daily. And with regulatory reporting, we automate the creation of prudential regulatory reports to your central bank. So the previous webinars in our series cover off these applications in more detail, and you can visit those on our website or view them online or download them using the link that I'm going to be sharing after this presentation. So what I'll do now, I'm going to hand back to Graham. And Graham, if you would be kind enough to take us through in a bit more detail the subject matter of the presentation. So you should have control now.
Thank you, Connor. Yes, so I thought we'd just do a little product tour here of the loan analytics and the loan application part of the BankBI product. So as I talked about earlier, really the fundamentals here is that we need to pull together loan applications submitted in the month. And what we're seeing here is an executive summary, a high-level view of all applications. Firstly, at the top of the screen, we have the ability to filter. We can go back and forward in time. We can select the month that we want to look at compared to any other month or previous months. We can drill down into a branch and region level as well, so we can look at it through the branch lens, or alternatively through a product lens. So we could look at it from our mortgage business, from our consumer finance, and the other product or business sectors that we have within the financial institution. And then within that, we can also subdivide the applications by a number of other attributes, things like channel, whether you have a sort of sales agency arrangement in place, maybe through campaigns that you've launched, you want to link the applications back through to those CRM campaigns. And then the sector as well gives those that are operating across multiple different sectors the ability to segregate business by those sector lines. So then we can track those loan applications, as I say, on a month-to-month basis, see that variance in a month, not just count them, but see what is the dollar or the currency value that we're looking at the average loan size. And we are a multi-currency system, so although we're showing figures here in dollars, obviously it will be in local currency, depending on your country. And we're also able to graph and chart those applications at the same time. Following on from that, we can break down those applications into what's been approved, funded, denied, and cancelled during the month. So it's giving us a complete picture of the high-level summary of the loan application, the loan funnel, as I said, through different channels. And then as we drill into that, we have a number of ways of breaking down this information into ever more granular ways of looking at it. So firstly, we can look at it by branch, by product, by the status of the loan. So where is the loan in the loan application process? How long has it been in that state, or how long has it been since the loan was application was originally made? And look at it by underwriter. So are we, what is the capacity? What is the performance? Do we have capacity issues? What are our conversion rates, and so on? And then finally, looking at it by credit score or by member or customer attributes. So we can get into gender, we can show it by age demographic, we can show it by customer type, by industry, by sector. So where there is a social remit in the current climate, we can build that into the analytics and filtering. And we're sort of well aware we have microfinance and credit union customers that are increasingly needing to show and evidence support of their clients in terms of maybe in terms of jobs created or jobs saved, impact on women in terms of many microfinance institutions, number of children impacted. So we can run the full metrics, if you like, from purely financial through to a combination of those financial and social performance metrics. Then moving on then into the application, we can look at longer term trends. So this is a trend dashboard. Using the same filters again, it allows us to trend the number of loan applications, trend the average loan size, looking at them by status, looking at them also by credit score. So again, in this month, how many loan applications did we receive or approve based on the various credit rating or credit scores of the customer. So a lot of granularity here to visualize the information, to chart and graph that information, but also the ability to drill down into the details. So we actually want to get into more granular details, and maybe that's through product, or maybe that's through organizational, like underwriter. So here we're looking at detail applications, both again in quantity in the middle, and then on the right in terms of the currency value. and again, a month-on-month, or in this case, a year-to-date change. So again, the filter at the top of the screen allowing us to flip between monthly monitoring and year-to-date monitoring. So where are we compared to this time last year, or where are we compared to last month? And with the significant changes we've been seeing a daily update to this, if you are digitized in terms of loan applications, being able to feed this through to an application like BankBI means that you are looking at the current picture of that loan application funnel, and therefore you're seeing that on a day-to-day basis. So not only as the loan being moved through to being approved and dispersed and funded, but you can also track what is in the funnel and therefore what is coming down the track. In this particular example here, we're looking at it by underwriter, by product, what we call product class, which is a way of just breaking or grouping products into the various product areas. And then within that, the dashboard is showing us the number of applications in the month and the dollar value. And again, we can get down to different levels of detail, and it also change the groupings in the rows here very quickly and very easily through other filters. So this is a very comprehensive analysis across all of the loan application process, and it's complemented by the other aspects that we have within BankBI. So obviously the loan application is that leading indicator, leading analytics we can perform on what will flow into the balance sheet. Then we have two complementary places that Connor will now run through. Firstly, financial performance, and secondly, banking performance. Financial performance is where the impact of that lending is going to hit in terms of interest receivable and the balance sheet. But during the life cycle of the loan itself, we can monitor that on a day-to-day basis, identifying the new production, identifying loans if they become delinquent, and whether there is a deteriorating position in that delinquency view. So with that, I'll hand back to Connor to take you through those FP and banking performance parts, and then hopefully you can get an all-round view of where the loan application indicators sit in leading through into that performance analysis. Back to you, Connor.
That's great. Yeah, thanks very much, Graham. So yes, I'd just like to give you a quick snapshot of our financial performance application. So if you think of financial performance, that's really everything relating to your financials. Sorry, just got a cough there. So really anything coming from your GL system. So taking a first view here, this is a view that is going to be familiar to the CFOs in our audience today. So every morning, as soon as you log in, you're presented with the daily dashboards that you need, covering the balance sheet, income statement, and key ratios. What we have on this dashboard in this example is a complete summarization of all assets and liabilities, and a detailed analysis of daily or monthly movements, seeing the budget variance, and then finally the change from last year end. The entire application itself molds to your chart of accounts. So this includes all of the hierarchy, the words, the product groupings, right the way down to the underlying GL accounts. So that should be something that will be very familiar to the CFO, but with all of the analysis there laid out on a daily basis for you. To take another example, what you're looking at here is a snapshot of performance ratios. So all ratios and values are configurable in the system, so you can easily track what you're most interested in. In this view, you're tracking the performance ratios against budget, monthly, and year to date. So you can instantly see where the variances are and drill down from that dashboard to work out what's happening based on your daily financials. So the business decisions that you're making are actually based on hard data that's underlying this. So taking a little look now at banking performance, everything in the financial performance is based on the GL balances coming in from the source GL system, as I mentioned. What we're also able to do is to bring in a feed of loan and deposit data from the core banking system. So we call that banking performance, and it covers all of the loan and deposit dashboards. So again, each morning when you log in, you'll be presented with your daily dashboard, and that helps you to track and monitor your banking performance overall. The dashboards include, for example, key customer metrics, and you can track performance of existing and new loan production across branch, product, loan officer, as well as profitability via weighted average rates, among other key metrics. You can switch views, as Graham was alluding to earlier, so you can compare views from month to month. So you can see comparisons of new loan production, or filter this further in case you want to drill down into product classes or groups, or even right the way down into individual products. So the dashboard's really designed to help you track the growth in your loan portfolio. In this example, against a weighted average weight for that loan portfolio. So that'll tell you if you're increasing your weighted average rate on a month-to-month basis. So when you want to understand how your new lending is performing, you can quickly view a series of analyses, both year-to-date and year-on-year. You can also track your non-performing loans trends and early indicators such as past due dates, as well as monitoring volumes and trends on a daily, monthly, month-on-month basis or compared to previous dates. In this example, you might want to access performance metrics to identify how a region or branch or a specific group of products contribute to the non-performing loans. The branch analysis can be used by the regional branch or product managers typically to manage their performance in comparison to peers and help identify areas for attention. All of the reports have filters, as we talked about before, and parameters that allow you to focus on specific products or branches or multiple measures of non-performing loans. You may want to focus on product performance analysis. This allows you to track and rate performance of loans by product across total loans, new loans, and also track where your loan portfolio is at risk by past due measures. So effectively leading indicators to later non-performance, including performance ranking to quickly see where you might want to focus your performance management efforts. In this example, the loan officer scorecard allows managers to see at a glance which loan officers are performing well or not so well versus their peers or the targets set by management. And that can be over short or medium term timescales or monthly, quarterly, or annually. So managers might also like to look at performance by business lines. So for example, that could be mortgages, personal loans, or credit cards, or by specific product managers. Excuse me, by specific products. So you can see if trends are general to the branch or region in question, or could actually be isolated to specific business areas within that unit. Now, finally, I just want to touch on our regulatory reporting solution. So as I mentioned with banking and financial performance, our application molds itself to your chart of accounts. Now, with regulatory reporting, what we're doing is effectively mapping your chart of accounts to the regulator's chart of accounts. The process is straightforward. We start by securely extracting the data and aim to automate that process daily. BankBI then applies all the rules, adjustments, and calculations required to compute the results. And then the reports are then available to BankBI to view or for download by the end user. So we think this provides the ultimate end user experience. So the reports can simply be selected by date by the end user, then downloaded or viewed online for the dates you need. So you can take a look at our regulatory reporting webinar. The links will be following up in the emails after this event. And you can see some more of the details behind how we get to these results, and you get some more insights into what a project looks like for that. So I think with that now, I'd like to go into our second polling question. Now, in this case, the question is to assess how digital your loan applications are today. So if you're fully digital, that's A. If you're partly, then that's B. Or if you're manual or paper-based, that's C. And again, if you're not in a financial institution or it's not applicable to you, then that's D. So if you bear with me now, I'm just going to be launching the poll now. Now that should be appearing on your screens. And I'll give you a few moments now to make your choices. So I'll just give you a few more moments to complete that. I think we've had responses from most people. That's great. So thank you very much indeed for answering that. So I'm now going to close that poll. And again, as I say, I'll be sharing those responses after this webinar. So moving on, I'd like to share, just give you a little bit of an insight about the BankBI philosophy here, because we actually focus on empowering finance to push information across the organization. So our aim there is to reduce pressure on executives by removing manual work and providing daily access to what we call actionable insights. So we're 100% cloud-based, and that gives you the freedom to monitor your financial, product, and customer-related performance management from anywhere in the world and on any device. The result for most of our customers is to simplify and automate access to information, and that really gives a lot of ability to free up key resources to focus on other areas. Our SaaS model allows us to implement and support our applications remotely in over 40 countries so far. So whether you're in North or South America, Europe, Africa, the Middle East or Asia, you'll be able to benefit from our capabilities. Given the current travel restrictions and remote working mandates for our customers, we believe our ability to remotely support our customers and deliver projects has become even more valuable. So we currently have 60 customers in 40 countries, and we continue to grow our business. Now, I think that's a testament to the value that we do bring. Now, I'd like to just hand back over to Graham now to give us a bit more insight, perhaps into how we're actually helping some specific customers.
Thank you, Connor. Yes, so this first case study is a bank here in the United Kingdom. They've been a customer of BankBI for more than 5 years now, so pretty much since our inception. And it's a good example, I think, of how we start with finance. We implement a solution to help automate financial reporting and the production of the management board pack and performance analysis. And what we were able to do is put into the hands of senior executives, CEOs, CFOs, not just the management reports at the end of the month, but also dashboards which are updated on a daily basis, which gives them the ability to look at a holistic view of the, in this case, bank's business over a number of different business areas. But as we've expanded beyond the Department of Finance, so we've moved into operational areas and business lines and down to branch management. So now today, all of the branch management use the BankBI system to access data regarding, especially around deposit taking and liquidity, but also around lending as well of the balance sheet. So really is a good example of cloud deployment, the rapid time to value, the simple use case of being able to use our application on any device, anytime, anywhere, and being really able to react quickly to the current pandemic. So as this bank transitioned into working from home for a lot of staff and let's say distance banking for a lot of their clients, having a tool like BankBI that was already cloud enabled, accessible from any location through the internet, really came into its own. There was no specific transitioning or contingency planning that need to be enacted to continue to use the application. Coupled with remote working from our side in terms of implementation means that we're now looking to move forward and explore more areas with this bank in terms of future requirements. The second use case I'd like to talk about, so maybe you can move to the next slide, Connor, please, is Vision Fund International. And Vision Fund International is the microfinance arm of World Vision, one of the largest children charities in the world. And their remit is, they operate in more than 30 countries, and their remit is to empower women and help through empowering women raise children out of poverty. So they do this through microfinance loans, microfinance lending. So in many regards, they operate like any traditional lender in terms of taking loan applications through an approval process, It just so happens that the loans are smaller in size and obviously based more around the markets and countries that they operate in. But they use BankBI in multiple ways. Firstly, within each of those countries around the world at a local currency level, we're able to provide daily analysis of the loan portfolio, capturing new disbursements right down to by product, by gender, by age range. We're able to measure the number of children impacted, now looking at employees and jobs created. And so that mix and double bottom line, if you like, of sustainability of the microfinance lender with their social performance remit is a really vital piece of performance analysis, not just for them, for their own mission statement, but also for them to explain to the various stakeholders and maybe donors who have provided funding into their business model as to how they're empowering women, as I say, and impacting children. Then at the consolidated level, what we've been able to do is to take a group-wide, country and continent-wide regional roll-up of that information. So despite having different currencies in more than 30 countries, we can roll that up through a consolidated US dollar view, provided into a regional as well as country as well as consolidated positioning, and again provide the right mix of financial statements in terms of traditional balance sheet income statement, but also looking at the social performance metrics in terms of the vision statement and mission statement of the microfinance institution. So I think we've got a great examples there of a bank using a more traditional banking model, if you like, and then us working in the microfinance world. And I know some of you on the call maybe from credit unions as well. That's a great mix of the two, if you like, in terms of local community support. And I know some of these social performance metrics are becoming even more important within the credit union model as well. And we feel well placed to assist in that journey. So with that, quick summary, back to you then, Connor.
That's great, Graham. Thanks very much indeed. So what I'd like to do now is move on to our third and final polling question of the day. So again, it's the same routine. It's answer the questions when they come up onto our screens. And this question is going to be about when do you expect to come out of the cost freeze mode and approve new projects? Now, that alludes back to when I started the presentation, just to see if that did align with your thinking and your planning at the moment. So I'd like to test that and understand if you're expecting to come out of the freeze and then move into project mode if you haven't already done so. So if it is, then it's A, and it'll be between now and September, or B for October to December, C if you're still not sure yet, or D if you don't work in a financial institution. So bear with me now. I'm now going to be launching that poll. So that should now be appearing on your screen. So if you could take a moment, please, just to read and understand the question, have a think, and then let me know what your response is. So I'll give you around 30 or 40 seconds to complete that poll, please. So it's still just collecting the final responses there. So I'll just give you another few seconds just before I close the poll. That's great. Okay, well, thank you very much for everybody for answering that. I'm going to close the poll now. And again, I'm going to be sharing that those responses with everybody after the webinar session. So I've talked a little bit about the challenges that are being faced in the industry at the beginning of the session, and obviously with Graham understanding how businesses are managing their performance based on the difficulties that we're all facing. And I'd like to talk a little bit about how BankBI are responding to help our customers and prospects. So firstly, what we're doing is just providing a try before you buy. So you're able to come in and register for free to our demo system, take a look around a fully working, fully featured demo system of our applications. And that's a good way to familiarize yourself with the full extent of the daily reporting that's available in the application. Secondly, we try to de-risk projects by providing you with certainty over services costs. So we have a very effective rapid deployment methodology, and we mentioned before that we're 100% remote capability. So our services we consider to be highly efficient, but you do have that peace of mind of the fixed services fees. And finally, we want to further de-risk your decision to use BankBI in the business. And one important aspect of that is that we provide a rolling monthly pay-as-you-go subscription fee. And you can also then, if that suits you, then that's fine. That can be, you can have the application up and running in a very short space of time, and then enjoy the application of the use of the application on a rolling month-by-month basis. Alternatively, we give beneficial terms for those of you that commit to longer-term contracts or subscriptions, so 1 year, 3 years, 5 years. So I think with that just brief overview now, I'd like to move on to our Q&A section. So I have had a number of questions coming in again, so thank you very much for those who've submitted the questions, and also for your patience just waiting to this point to get those answered. So I'm going to pick a few to cover off now, but as I mentioned before, I'm going to provide a written response to all questions as part of the follow-up so that you can get a proper response to it, because some of them are they do require a little bit more of a longer time to respond to, but I think it's something we can do quickly in writing afterwards. Now, Graham, I'm just going to pick through some questions here. So perhaps if I could put the questions to you, I'll go to our first question. How does BankBI integrate to our loan funnel data?
Thanks, Connor. Yeah, good question. So one of the things that we're able to provide to our clients, although we are a cloud-hosted and cloud-based system, we can, through that cloud application, provide a process that can run on-premise for our clients. And that piece of software is very flexible. And what it allows us to do is to take different data sources. And so in this case, the loan funnel data. So let's say we had loan originations coming across 3 different platforms. We could take 3 different extract files and we could consolidate them together. We could strip out anything that's considered personally identifiable information for the customer. And we can do all of that on the client side before the data is then uploaded to us as an application. So as part of the secure encrypted end-to-end process, we're effectively able to help our clients through our tooling take the data they already have without having to do anything to it themselves other than provisioning it to a location. And then we can use that, consolidate it, and take out of the information that we need. So what we've done to populate our application is worked out the minimum data set that we need for a loan application or for a disbursed loan or a deposit or for financial general ledger data. So we know exactly the number of fields we need, and we're able to, as I say, provide the tooling to help that data flow through into the application.
That's great, Graham. Well, thank you very much for that. That's a complete answer. So I'm just looking at the other questions. I think the next question, should hopefully cover off. It may overlap a little bit with the responses to the first question, but I think it certainly should touch on some of the questions I've received. So the second question is, can we start with loan funnel analytics, and how long is a typical project?
So yes, loan funnel analytics can be viewed as a standalone component of our solution in terms of enabling it. So we're not dependent there on getting any other data from core systems or GL to get the loan application analytics running. So if that is the emphasis, we can definitely start there. We can definitely ring fence that data set from any other data. So rather than running a very large project where this piece would be the end result or one of the end results, we can actually start and deliver in a very phased approach. So this gives us a rapid time to value here. If as I say, emphasis is on loan funnel analytics, we can provide that immediately as phase 1, before going on to any of the subsequent phases. In terms of how long is a typical project, can depend on number of data files, how digital the loan applications are, but we're really talking in a small number of days here to get a system implemented. And the reason is because we know exactly the data fields that we need. So generally, it's a case of mapping from the source data that you're able to provide. And we do that mapping with you. As I said, we do that before any data leaves your premise, before we get our hands on it. And so you only send to us data and information that you're happy to. As I say, we have depersonalized and secured and all the rest of it. So yes, we can start with loan funnel analytics. It requires around about 20 fields of data, and we can consolidate and pool data from multiple origination systems.
That's great, Graham. Thanks very much indeed for those insights. And I think to cover a last question, so we touched on this topic during the session today, but I think it's probably worth bring this question up here now. So do we track loan conversion rates and capacity planning?
Yes, again, all very good questions. So yeah, I mean, key and fundamental to being able to do that is obviously capturing loan applications as they occur, being able to monitor those applications as they change their status as they go through the approval process, being able to work out, number of days it took between those various changes in status, and also linking obviously approvals and disbursements, or certainly approvals, back to the underwriting capacity, and being able to monitor that on an ongoing basis as well. So yes is the answer. Obviously, there's always generally some nuances to the requirements, and so obviously we would discuss that as part of the implementation phase. But we feel we've got the fundamental building blocks and metrics that are required to provide information in those areas.
That's great, Graham. Thanks very much indeed for that. Well, I think those questions were representative of a number of the other questions that we've received today. So I think some of the detail of the other questions, I think, to respect everybody's time on the webinar today, as I say, I'll be following up with those with full responses to those questions in writing after the session today. So we will answer all those questions, and thank you very much for submitting those. So I think now, just to move on to the end of our session, and I wanted to be able to offer you some next steps, some concrete next steps. So as I mentioned before, you're able to register for access to our demo system. So that'll enable you to take a look around the system. There's no obligation, and it's a great way to get a better idea of what's available to you across our financial and banking performance applications. And alternatively, if you would like to book a session with me, then for a guided tour, then you're very welcome to do so. Or if you have a specific project that you're working on that you think we can help with, again, just reach out to me and I'll be very happy to discuss that with you. So finally, I hope you found this session to be helpful. As I mentioned, I'll be sharing the recording and presentations probably next week. So do keep an eye out for our next webinar in July. We'll be continuing with the theme of lending. Next time around is loan analytics for restructured, refinanced and rescheduled loans in your portfolio. So I know your time is extremely valuable, so I'd like to end by thanking you all for taking the time out to participate in this session. So once again, from Graham and myself and the whole team at BankBI, thank you for attending, and I'll now be closing the webinar.